What did today's NFP report really tell us about what is going to come next out of the financial markets? In today's video, we'll be reviewing the latest jobs data, but more importantly, what this means for gold, what it means for stocks, and what it means for bonds, currencies, and much, much more. Let's jump in. Welcome back, guys, to another video. And as we get started, I do want to just ask a favor of you. If you could hit the thumbs up button and subscribe if you're new to the channel. I hope to offer you a little bit of a daily analysis video that helps to keep you up to date with the fundamentals in the markets, which are truly the moving forces in finance. Speaking of moving forces, today the market started moving pretty quick after the NFP report dropped, and I want to break this down piece by piece. So for the month of November, we saw the report here today came out that we saw 227,000 jobs added to the US economy. This was slightly above forecasts, which were about 202,000. And if we zoom in on this chart here called the actual minus forecast chart, we built this chart just to be able to visually see how large or little of a beat this actually was. And you can see that the magnitude here of the beat today was a little bit. It was not a big beat, but it was also not a bad number, which is good signs for the US dollar. But there's some other components that came out with this report that I want to break down for you to make sure you have the full picture. So we did beat in terms of jobs added for the month of November, but the story sours just a little bit when we see that the unemployment rate also ticked higher during this time. And this is often a question that I get, which is, Nick, how the heck can jobs get added, but at the same time, unemployment rate went up? And the reason here for this is because, again, unemployment rate takes a little bit different of a view of the labor market. It says basically, of the people who are looking for jobs, how many of them are feeling unemployed or they're filing as unemployed versus the NFP number, the actual jobs change is just simply how many people got added in terms of a magnitude or a number of jobs to the economy. So while jobs added were decent, we also saw an uptick in an unemployment rate, which is of course a negative thing. Finally, and still very importantly, we did get some wage growth information today, which showed us that there was still a nice, healthy 4% year-over-year wage growth in the US. Now, obviously, if it was up to us, we'd all get 100% raise increases every single year. That would be great. But in, of course, real world, everything costs money. There's, so on and so forth. You have different business expenses, etc. But wages growing at 4%, is that good or is that bad? Well, it really depends where inflation is. And inflation has been cooling. And in my opinion, this is why people are feeling a little bit better than they used to feel, right? Back in the day when 2022, when you'd go to the grocery store and it felt like you were getting hit by an anvil every time you walked in the door because the prices went up so much, things have slowed down and the price rises. Now, of course, prices are still rising, but they're rising at a much slower pace, and people's wage increases are actually, at least if we take the 4% wage increase, right, year over year, compared to the, let's call it 2.6% inflation, there is actually a positive spread here. So as opposed to if people were getting 4% wage increases, but there was an 8% inflation, that hurts a lot. It means that your purchasing power is eroding faster than your wage increases. So we've reversed that course, and that's why I think people are feeling a little bit better now than they were back in 2022. And that feeling good nature is, in my view and opinion, why Bitcoin is also up so much. Yes, there's also the pro-Trump administration stuff that has people excited about Bitcoin, but I think Bitcoin also is up because the consumer is feeling a little bit better than they did back in 2022. And go figure, back in 2022, people were getting really hurt by the grocery store and their rent and everything skyrocketing in price. And Bitcoin, lo and behold, became, in my view, like a piggy bank for people. They sold their Bitcoin to pay for real life. By the way, if you enjoyed taking a look at some of this market data and you'd like this data and much more, the Cyber Monday week deal is ending today. Today, we are currently offering 40% off the Edge Finder, which is our market scanning software. You can also join our VIP group if you have not already for 40% off and get trade alerts every time I take a position in the markets. So all of that information can be found down below in the description. Don't miss the discount. Today is the last opportunity to do so. Taking a look at a 15-minute chart of the S&P 500, what we can see here is this is where the jobs data came out, and basically what we saw here was sort of a mixed reaction at first, but then we have now made a move north here today. Now, don't be deceived by this chart here. This is a big move up in terms of the 15-minute chart, but in actual terms, we didn't see that big of a move. And I think that that's actually a valid sort of response, considering what I would say the NFP report, a good word for it was pretty mixed. You had unemployment rate rise and a healthy number of jobs added. So overall, kind of a mixed outlook. We also do, however, see the NASDAQ up 0.8% at the time of recording this video, looking really strong and marching north here, still above that all-time high. So NASDAQ looking very, very strong here recently, and Dow Jones kind of flat here in the last week or so. S&P 500 modestly higher here, and then we turn to gold. But before we do that, let me just finish up. Sorry, I jumped the gun. I got excited to talk about gold. Last thing I'll say about the indices, I am still very bullish. I've said this 1,700,000 million times in my trading career, but I'm waiting patiently for a pullback. There's nothing I can do until I get a pullback. When we take a look at gold, and I think this is worth mentioning, the neutral rating here on gold is sort of new. We were seeing a little bit more of a strengthening signal for gold in recent times, but gold getting just a +3 still remains neutral. I'd really like to see trend pick a direction. If we can get a bullish trend here forming for gold, meaning specifically, like let's say, for example, we start to see a break to the upside, gold very much could be a positive signal and even a bullish setup for me going into the new year. But currently where we sit, very neutral. Price action continues to be very stagnant and boring, not really making any sort of serious decisive moves. So gold is very much a neutral reading for me. What I did think was interesting is this morning we did get some bearish signals on USD JPY, which is a currency pair that I like to watch a lot. And I'm very curious to see if we can actually start to take out these lows right around 149. We had some momentum building to the upside, and then we seemingly have failed out a little bit here and even taken out some key levels of support. So either a rally in this price may look like a selling opportunity in my view, or a break and retest could also look like a selling opportunity for me on the dollar yen. Turning now to the US dollar, we're sitting just shy of 106 at the time of recording this, and I'm really curious to see this level of support kind of held on NFP day, but it depends how this candle closes. If you get a big reversal today and prices actually trades lower, if we can close below this low, the dollar index may be due for a larger scale pullback in what has been a very strong period for the US dollar. Currently, my outlook on the dollar is slightly bullish, but kind of neutral like a lot of things at this time. And I just want to remind you that our sale, of course, is ending very soon for everything that we're doing. Cyber Monday, 40% off pretty much everything in our store. So don't miss out. All of the information will be down below in the description if you want access to the Edge Finder or the brand new stock box that launched this month. Or if you want access to the VIP group, all of it is currently 40% off until the end of the week here. So don't miss that chance to pick up a copy of the Edge Finder, Stockbox, or VIP membership at the lowest cost of the year. I know we've said it many times, but this is really, truly, the biggest discount that we do all year and the last call to take advantage of it. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.